Do you ever look at your phone and think, why does sending money still feel like a chore in 2025? You wait, you verify, you get hit with a fee, you hope it clears, and somewhere in that mess you realize we've been conditioned to believe this is normal. But let me tell you something, it's not. Because halfway across the world, 1 billion people just tap a button and boom, money moves. Instantly. No card, no bank login, no fees, just done. And that system, it's called UPI. And it's not just changing the way India pays, it's rattling the ground under America's feet, shaking up Silicon Valley, Wall Street, and Washington all at once. This isn't about finance. This is about power. If you want to understand how one simple piece of tech is quietly exposing the cracks in our so-called advanced economy, if you want to know what Apple, Google, and even the US Federal Reserve are racing to respond to, stay with me, because by the end of this talk, you won't just understand why UPI is shaking the US to its core, you'll realize it's already happening. Let's get one thing straight. UPI isn't just another payment method. It's not the next PayPal. It's not a slightly better Venmo. It's a completely different category. It's a financial infrastructure overhaul, and it's happening faster than anyone in the US is prepared for. While Americans are still fumbling with chip cards, 2-day ACH transfers, and Zelle's clunky limitations, India has rolled out something that feels like it's from the future, even though it's already in the present. Unified Payments Interface, UPI, is fast, instant, real-time, peer-to-peer, bank-to-bank. And the kicker? It's free. Now pause for a second and think about what that means. No fees, no waiting, no third-party payment processors skimming a cut off the top. This completely shatters the business model of every major US financial platform. Visa, obsolete. MasterCard, threatened. Banks, uncomfortable. Fintech giants, scrambling. And here's the wild part. It happened in under a decade. UPI launched in 2016. In less than 10 years, it's processed more digital payments than every single US platform combined. Let me put that in perspective. In May 2024 alone, UPI processed over 14 billion transactions. That's more than double what the US processes through ACH and card payments in the same period. Think about that. A public digital rail built by a government-backed tech-forward coalition has enabled 1 billion people to send money as easily as sending a text. This isn't just disruption. This is warp speed revolution. In the US, we're still stuck in financial molasses. Our systems were built for a pre-internet world. We layer tech on top of them, apps, wallets, workarounds, but we never fixed the rotten plumbing underneath. UPI didn't do that. It started fresh. It asked, what if we didn't have to work with the banks? What if we made them irrelevant? And the results are breathtaking. A street vendor in Mumbai can accept payments from anyone with a smartphone. No terminal, no cash, no app fees. A teenager in a remote Indian village can buy concert tickets or pay their phone bill in under 5 seconds. Businesses large and small can run on QR codes, no POS machines, no paperwork, no overhead. It's not a tech feature, it's a lifestyle transformation. And that's exactly why it's terrifying to US financial giants. Because what do you do when convenience itself becomes the threat? How do you compete with a system that's not only faster and simpler, it's also free? You can't charge 2.9% plus 30 cents per transaction like PayPal. You can't hide behind 3-day settlement times like US banks. You can't sell bloated rewards cards and pretend you're innovating. Because once people see how easy it can be, they never want to go back. That's what disruption looks like. Not just building a shinier app, but resetting expectations. UPI has done something we thought was impossible. It made people believe money should move at the speed of thought. I think it's the most exciting. And once that belief takes hold, the old system starts to crumble. So while Silicon Valley keeps talking about the next big thing, the real revolution is already here. It's in India. It's called UPI. And it's moving faster than any of us expected. Let's face it, Americans love to believe we're leading the world in innovation. Silicon Valley, Wall Street, big tech. We've convinced ourselves we're always ahead of the curve. But what if I told you there's a massive tech revolution happening right now, one that's changing how an entire country handles money, and no one in the US is talking about it? What if I told you the next big leap in financial technology isn't coming from New York or San Francisco or some startup incubator in Austin? It's already here, and it's coming from India. That revolution is called UPI, Unified Payments Interface. And the scary part for America is you've probably never even heard of it. Why? Because we're so used to thinking of ourselves as the innovators, we've become blind to disruption when it comes from anywhere else. But UPI, it's not a startup. It's not hype. It's not hype. It's not even new anymore. It's a fully scaled, nationwide, real-time payment system that over 1 billion people use every single day. Let that sink in. In India, your barber, your fruit seller, your Uber driver, and your grandma are all using UPI seamlessly. Scan a QR code, enter the amount, done. Instant bank-to-bank transfers, 24/7, no fees, no cards, no friction. You can literally walk through a market in Delhi and pay everyone from a tea vendor to a mobile repair shop without ever touching cash or pulling out a credit card. Meanwhile, in the US, we're still saying, wait, I'll Venmo you. Can I Zelle you tomorrow? Let me get your PayPal email again. And we wait hours, sometimes days, just for money to clear. What UPI has done is redefine what's possible with money movement. And here's the kicker. It's not run by a tech giant. It's not monetized with ads. It's public infrastructure. Let's compare that to the US for a second. Here, real-time payments, you're lucky if your bank supports it. You want to send money from Chase to Bank of America instantly? Good luck. You want to pay a small business without them losing 3% in fees to a card processor? Keep dreaming. We're so tangled up in legacy systems and legacy thinking that we don't even realize we're years behind. Here's the truth no one wants to say out loud. India leapfrogged us. Yes, the country we once labeled a developing economy just built one of the most advanced, inclusive, and scalable payment systems the world has ever seen. And we're still arguing over overdraft fees and contactless cards. UPI didn't just make payments easier. It created a cultural shift, a default expectation that money should move instantly and for free. It's so embedded into daily life that people don't even think about it anymore. They don't say, should I UPI you? They just do it. It's like breathing. That's when you know a revolution is real, when it disappears into the background. The fact that you're not hearing about UPI on CNBC, on TechCrunch, or in US government briefings, that should terrify you. Because when something this big flies under the radar, that's when it's most dangerous to the status quo. Think about it. If the US had developed UPI, we'd be blasting it into space with Super Bowl ads, TED Talks, and billion-dollar IPOs. Instead, we're quietly watching from the sidelines, or worse, not watching at all. This is the silent revolution. And just because we're not talking about it doesn't mean it isn't already changing the rules. UPI isn't coming. It's here. And if America doesn't wake up soon, we're not just going to miss the boat, we're going to find out we were never even invited on it. Let me ask you something. What happens when 1 billion people stop needing a credit card? What happens when an entire nation skips the plastic, skips the terminals, skips the fees, and just moves money instantly from one bank account to another. You get a financial earthquake. And the epicenter is UPI, Unified Payments Interface, is not just another cool tech tool. It's not a Venmo alternative. It's an existential threat to companies like Visa and MasterCard. And they know it. For decades, those two giants have operated like invisible toll booths across the global economy. Every time you swipe, tap, or enter a card number, they're there, quietly taking a piece. 1.5%, 2.5%, sometimes more. You don't always see it, but the merchant sure does. And guess what? And to prevent this from happening, they now spend all their time privately locking your downside. Anybody who doesn't have an account with Visa. They're also the ones who call off Visa's service. And guess what? They take an active vote to protect your personal data. That's their entire business model. Billions of transactions, billions of tolls, and a world conditioned to accept it because, well, that's just how payments work. But UPI came along and said, what if that toll booth didn't exist? What if you could move money instantly, securely, and directly between bank accounts with zero transaction fees? Suddenly, the whole card-based system looks outdated, like floppy disks in a world of cloud storage, like Blockbuster in the age of Netflix. Visa and MasterCard weren't built for this. They were built for a time when physical cards were the only way to transmit money digitally. But UPI operates in a world where smartphones are universal, internet access is everywhere, and trust doesn't have to come from a plastic rectangle. Let's be clear. UPI doesn't need a card, doesn't need a POS terminal, doesn't need an app ecosystem or a middleman. And because of that, it doesn't need Visa or MasterCard or any of the legacy infrastructure America has built its payments industry on. This is why financial elites are panicking quietly. Think about it. If UPI's model spreads, and it's already being adopted by countries like Singapore, France, and the UAE, we're talking about a complete rewrite of global payments. We're talking about a complete rewrite of global. Now, you might be thinking, okay, but the US won't adopt UPI anytime soon. And you might be right. But here's the catch. It doesn't have to start here to affect us. Visa and MasterCard aren't American-only companies. They make a massive chunk of their revenue from emerging markets, places where UPI is expanding, places where QR codes are popping up in taxis, roadside stalls, and restaurants. Each one of those QR codes is a closed door to card companies. It's a tiny rebellion that adds up. In fact, just in India alone, card usage has already stalled, even declined in some sectors. Why would a business owner accept a card with a 2-3% cut when they can get full payment instantly for free with UPI? Now imagine that thinking spreading from India to Southeast Asia, from Asia to Africa, from Africa to Latin America, a domino effect. And every falling domino is a lost fee for Visa, for MasterCard, for banks, for payment processors. This is not science fiction. It's already in motion. In 2023, Visa's own CEO had to acknowledge in an earnings call that alternative payment methods are gaining ground, especially in high-growth markets. That CEO speak for, we're watching our business model get dismantled in real time. And it's not just Visa. Credit card culture as a whole, the idea that you need to borrow money to spend money, that you should earn points in exchange for debt, it starts to feel like a scam once you've experienced the simplicity and freedom of UPI. So here's the hard truth. Visa and MasterCard aren't just facing competition, they're facing irrelevance. And if they don't radically adapt fast, they'll go down like every other industry that failed to see the revolution until it was too late. Because once the world gets a taste of zero-fee instant universal payments, they'll never settle for anything less. And that's not just a threat to the status quo. It's the end of it. Let's get one thing out of the way. India didn't catch up to the West in digital payments. It skipped the line. While we in the West were polishing legacy systems, tweaking old tech, and building shiny apps on broken foundations, India started from scratch and launched itself into the future. That's what leapfrogging means. It's when a country, a culture, or a system doesn't try to catch up step by step. It just jumps over everything in one massive focused move. And when it comes to digital payments, that jump was UPI. Let me paint a picture. In the US, you have a bank. That bank issues you a debit or credit card. You use that card to swipe, tap, or enter numbers on a website. The transaction passes through layers of networks, processors, gateways, card brands, acquirers, and finally reaches the merchant's bank. It's slow, it's messy, it's expensive. In India, you open an account, you link it to your mobile number, you use a UPI app, of which there are dozens, and you send money directly to someone else's bank account. No card, no terminal, no delays, no fees, done. Just like that. So how did India pull this off? How did a country with a massive population, patchy internet in rural areas, and historically low banking access do what the richest nation on earth still hasn't? Here's the secret. India didn't try to fix the past. It built for the future. UPI wasn't built by a private company trying to maximize profit. It was designed by NPCI, the National Payments Corporation of India, a government-backed organization with one mission: make money move simply, instantly, and affordably for everyone. And they didn't stop at tech. They rewrote the rules. Interoperability. UPI is platform agnostic. You can use any UPI app to send money to anyone else, no matter what app they use or which bank they're with. And that, you can try doing that with Zelle and PayPal in the US. Good luck. Zero fees. Not low fees. Zero. For users, for merchants, for everyone. Think about how disruptive that is in a country where swipe fees are $1 billion industry. Open ecosystem. Instead of locking you into one app or one bank, UPI invites competition. Google Pay, PhonePe, Paytm, WhatsApp Pay, they all run on UPI rails. They're not competing on infrastructure. They all run on infrastructure in Fintech. They're competing on user experience. That's a level playing field the US can only dream of. But the real leap, it wasn't technological. It was cultural. Because UPI didn't just bring fintech to the rich. It brought digital money to everyone, including those who had never even used a debit card before. Picture this. A vegetable vendor in a rural town accepts UPI payments with a QR code stuck to a wooden cart. No internet? No problem. UPI works via offline SMS-based approvals. No smartphone? There's a way to use UPI through basic feature phones too. It's that inclusive. UPI turned what was once a privilege, seamless money movement, into a public good. It leapfrogged not just past the US in convenience, but past the entire notion that you need to be wealthy or urban or tech savvy to be part of the digital economy. And while we're still over here debating which bank's app is slightly less annoying, India is building a cashless society on its own terms, one transaction at a time. Here's the truth that makes Western systems uncomfortable. India didn't have to fix an old system because it never had the burden of legacy. So it skipped cards, it skipped terminals, it skipped the idea that financial innovation must come from a handful of billion-dollar companies, and instead it built something smarter, faster, more inclusive. That's leapfrogging. That's revolution. And the rest of the world is starting to notice. Let's cut through the noise. UPI isn't just India's story anymore. It's a global disruption. And the United States, we're running out of time to pretend it's not happening. For the last decade, American institutions, banks, fintechs, policymakers have watched UPI from a safe distance, arms crossed, smirking. "Oh, that's cute," they said. "Interesting for a developing country, but it won't scale here." People like their credit cards. Regulation would never allow something like that in the US. Guess what? That safe distance just collapsed. Because UPI is no longer just a domestic Indian innovation. It's becoming a global benchmark. The National Payments Corporation of India, NPCI, has already launched UPI-like systems abroad, including in countries like Singapore, UAE, Bhutan, Nepal, France, and Sri Lanka. We're now seeing cross-border UPI payments, people using Indian apps to pay merchants in other countries in their local currency. This isn't theoretical. It's already happening. And every time it does, it chips away at the stranglehold American financial institutions have had over global transactions. Visa, MasterCard, and even SWIFT, the holy grails of global money movement, are suddenly staring at a model they can't compete with. Let's be honest, America's payment systems are held together by duct tape. Zelle is a patch. Venmo is a patch. Stripe is a patch. None of them fix the foundation. They just decorate it with a better user interface. Meanwhile, India built a whole new plumbing system for money, faster, cheaper, and infinitely more scalable. So here's the question we can't keep ignoring. What happens when other countries adopt UPI before the US even considers it? Here's what happens. US merchants start losing out on international customers who expect real-time fee-free payments. American fintechs fall behind because the infrastructure they're built on is simply too slow and too expensive to compete. The US dollar's dominance in digital trade starts to erode, not because of politics, but because of convenience. You know what's coming next? Tourists landing in America and asking, "Why can't I scan a QR code and pay like I do at home?" Foreign students in US universities saying, "Why does it take 3 days for my bank transfer to go through?" Small US businesses asking, "Why am I paying 2.9% plus 30 cents to accept a payment while Indian shopkeepers pay 0? That's not a slow shift. That's a tsunami of expectation crashing into a system built for the 1980s. And yet most US decision makers are asleep at the wheel. The FedNow system, a small step, and it's years late. It still doesn't offer open APIs. It's not consumer-facing. And it's nowhere near the scale or usability of UPI. It's like showing up to a Formula One race on a bicycle and saying, "Hey, look, we're innovating too." No. We're reacting late, slow, and scared. UPI is forcing the world to reconsider the very nature of money movement. Why do we tolerate delays? Why do we accept fees? Why do we keep pretending that banking innovation must be slow, expensive, and exclusive? The American financial system is being shown up, not by Wall Street, not by Silicon Valley, but by a government-led, open-source public payment infrastructure from the world's largest democracy. Let that sink in. We can't ignore UPI anymore because it's redefining what normal looks like. Just like Tesla redefined what cars could be, just like the iPhone redefined communication, just like Amazon redefined retail, except this time it's money itself being reinvented. And the US is not leading that reinvention. We're trying to explain it away while the rest of the world adopts it. This is our Kodak moment. You remember them? They invented digital photography and then ignored it until it killed them. And then they killed digital photography and then ignored it until it killed them. The US can't afford to be the Kodak of financial systems. UPI isn't coming for us someday. It's already here. Here's the wake-up call no one in America wants to hear. We are not the default leaders in innovation anymore. For decades, made in the USA meant leadership. It meant the best minds, the boldest ideas, the biggest breakthroughs. We exported Silicon Valley culture. We exported software, hardware, and ambition. And we exported the safety of the supply chain that made it possible for all of us. And we exported for hardware and ambition. 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 But now we're coasting. While we were busy cashing in on the past, India was building the future. And that future has a name: UPI, Unified Payments Interface. A government-backed, zero-fee, real-time payment system that reaches more people than Apple Pay, Google Pay, Venmo, Zelle, and every US bank app combined. Let me say that again: more people, more reach, more innovation. It's not just impressive, it's a mirror held up to the American system. And the reflection isn't flattering. Because here's the truth: innovation is no longer about who started first. It's about who's moving fastest. UPI is the product of vision, urgency, and public purple alignment, something we've nearly forgotten how to do in the US. In America, we've let our Fintech future be dictated by Wall Street incentives and 30-year-old rails. We confuse product polish with systemic innovation. We build billion-dollar apps on top of infrastructure that's fundamentally broken, and then we act shocked when someone else reinvents the whole system from scratch. India did that, and it wasn't a fluke. It was intentional. While we've spent years adding friction fees, fraud checks, settlement delays, India eliminated it. They designed for inclusion first, not just profit. They made payments a public utility, not a luxury feature. That's the kind of thinking that should have come from us, but it didn't. And now we're playing catch up. So what does this mean for American innovation? It means we need to get uncomfortable, because innovation doesn't come from defending what worked yesterday. It comes from questioning everything, even the foundations we built our empire on. We need to ask ourselves, why does it take days to move money in a world of real-time communication? Why are we still swiping cards when QR codes and account-to-account transfers are faster, safer, and cheaper? Why are we allowing tech companies to profit from inefficiency instead of redesigning the whole model to be smarter and more equitable? UPI should scare us, not because it's a threat, but because it's a blueprint we didn't think of first. The wake-up call isn't just look what India did. It's what's stopping us from doing the same or better. And if the answer is regulation or banks or legacy systems or Wall Street, then we need to ask, are we protecting innovation or are we protecting interests? Because innovation doesn't wait for permission. It moves, and if you don't move with it, you get left behind. Here's what the US needs to do now. Stop patching. Start rebuilding. We can't slap real-time payments on top of 40-year-old architecture and call it progress. Public purple collaboration. Public purple collaboration and UPI worked because the government didn't just regulate, it built. We need that kind of ambition in the US again. Make inclusion the foundation. The US fintech scene has ignored the underbanked for too long. UPI serves everyone. So should we. Redefine innovation. It's not about flashy apps or unicorn IPOs. It's about building systems that move society forward and work for everyone, not just the elite. Because if we don't wake up now, we'll be watching a generation of global innovation happen without us. India made their move. They've shown what's possible. Now it's our turn, not to catch up, to leap forward. but only if we stop pretending we're still ahead, because the new financial revolution